Hey everyone, it's Cincy, your go-to Forex trader, here with all the positive vibes. In my last video, I touched on the market's gradual recovery from the lows we saw after the carry trade crash. Now with the Jackson Hole Symposium around the corner, we're about to find out if the market will keep climbing or if we are going to see more turbulence after the Fed's announcement. But before we dive into that, I want to share some exciting news about my $2,000 account challenge. Yes, I started with $2,000 of my profit and aim to grow it over 30 trading days. Guess what? Tomorrow marks the 30th day, and guess what? The account is up over 150%. That's an incredible return, and it's a testament to why I am so passionate about Forex trading. Even though the 30 days are up, I am planning to keep trading this account because it's attracted a lot of interest. In fact, the majority of my views on my YouTube page come from the updates on this challenge. So if you haven't already, please subscribe to my channel to support its growth and keep up with all the latest updates. I will continue posting about this account and will definitely make some withdrawals to give back to the community. Now let's jump into the charts where I will show you how I typically enter trades, set my stop loss and take profit, along with how I manage. Welcome to my channel, it's your boy Cincy. What's good, people? Today I'm going to be showing you guys how I typically enter trades, set my stops, and also how I normally manage my risk. Again, this is going to be very, very interesting, so I want you guys to keep an open mind, as this is going to be something you are most likely not used to. Again, I learned this thing. I'm not going to take credit for this system. I actually learned this from a very, very popular YouTuber that goes by VP. You know, his main page is No Nonsense Forex, and I used the COVID period to kind of study some of the things this guy was saying, because nobody was preaching the gospel of Forex the way this guy was. Everybody was so fixated on their indicators and whatnot, but this guy found a way to just explain how Forex needs to be traded, how you can trade Forex by just implementing certain methods, you know, looking at indicators and using that as a guide to understand the trend of the market, and also implementing trading psychology into it, and how all this along with risk management all come together and make sense. So please, if you haven't taken the chance to look this guy up, and if you've been struggling in Forex, please, I urge you to take the chance to go to his page. Again, it's called No Nonsense Forex, goes by the name VP, and just watch all his videos, watch all his playlists. I bet you will learn something from it, and you will be able to understand a better way to trade Forex. Again, this is for people who are looking to learn Forex for the first time, or if you're already trading Forex and you're already struggling with your trading. Okay, now I'm going to be going into the chart, and like I said, I'm just going to be showing you guys how I look for my trades. Once I find a trade, how I enter the trade, how I set my stop loss, how I set my take profit, and also how I manage my risk. Because if you have a $10,000 account and somebody who has $50,000 account, we are not going to be opening the same lot size. So I'm going to be showing you how to open your position size based on your account size. You know, so this is going to be very interesting. Again, keep an open mind, and let's dive into the charts immediately. Welcome back again. So like I was saying, whenever it comes to me trying to use technical analysis to predict the movement of any components, you know, it could be Forex, it could be oil, it could be stocks, whatever the case might be, you know, like I was saying, the first thing I always, you know, look for is, you know, the first is my primary indicator. You know, I go straight to my chart, and I always have my watch list. You know, my watch list is always presets, and I pretty much just, you know, scan through them. So my watch list is what you see here, and you can see, you see Forex, and if I scroll down, you see my watch list also consists of, you know, spot metals, consists of oil, consists of your indexes such as your XPX 500, your NAS 100, your JPEN 225, and also you know, Bitcoin, and then you can see your stocks as well. So you can see I trade pretty much a whole bunch of stuff, and that's the good thing about my system. So like I was saying, the first thing I always do is I just pretty much scan through all these watch lists, and one after the other, and immediately I see something that are likes. For example, looking at CHF JPY, which is the Swiss franc Japanese yen. For those of you who have been following me, you know the first thing I always look at is my primary indicators, and my primary indicators in this case is my B sign and my green arrow. So this is telling me that this is going to be a buy position in a situation where I do open one. And also looking at my baseline. So my baseline, also the color is relative to the trend. So if it's a buy, I'm going to be getting a green color, and if it's a sell, I'm definitely going to be getting a red color. So in a situation where we're getting a buy and an upward arrow, you can see that we're getting that green color. Now, also another thing I want is my price. My price is the candlestick. My price should be trading above the baseline in a situation when I have a buy and a green arrow. Now, if I was to have something of more of like a sell and a red arrow, the price should be trading below the baseline. So you can see now that I've confirmed this on my chart, the next thing I want to look at is my secondary chart indicators, which typically go below the primary indicator. Now, the first thing, if I was to zoom in, when you guys look at, is my ATR. My ATR is my average true range. And how do I use this? I simply just look at this number. Now, pay attention to this number. You see this number, that's the 1.612. The 1.612 is the number that I want to put at the back of my mind. So once I know that number, give me 1 second here. Once I know that number, I simply go back to my chart. And what you want to do is I want to pull out my ruler. And now listen, I want to make sure that the distance between my baseline and this candle should not exceed that 1 point. What was that number again? Should not exceed that 1.6291. I think that was the number, I can't remember, but let's just say 1.654, whatever the case might be. So you guys get the gist here. So if I was to zoom in, so I'm bringing my ruler and I measure again from here, you can see that this is telling me 67 pips or 0.673. So that does not technically exceed that 1.6594 number that we saw for my ATR, right? So this is telling me that this is a good entry. So the minute I get that this is a good entry, the next thing I want to do is start looking at my other secondary indicators. So the first thing I'm also going to look at is my first indicator, which is going to be my zero line cross. And let me expand this. Why am I having a difficult time expanding this? Apologies for this. So my zero line cross, so you can see this is my zero line cross, and my zero line cross, the way it works, and the reason why it's a zero line, because this is the zero line and this is my signal line, which is the green line. So whenever the signal line is above the zero line, then that is going to be a buy signal. But whenever the signal line is below the zero line, then that's going to be a sell signal in this particular case. So you can see that on this particular day, if I was to zoom back and move this back, on this particular candle, let me mark that candle so we know the candle that we're looking at. Let me just mark this with this purple line. So if I was to go back to this and expand, so you can see that on this day that my signal line is actually above my zero line. So this is going to be a buy signal, right? So now once I confirm that, I want to take a look at the second indicator. The second indicator is more of a two-line cross. It's a little bit different from the first one. And here we're looking at fast line, which is the green line, and a slow line, which is the red line. So the rule is simple. Whenever the green line is ahead of the red line, then this is going to be a buy signal. And whenever the red line is ahead of the green line, then that is going to be a sell signal. So you can see at some point here, we had a crossover where we went from a sell signal to more of a buy signal. And looking at my purple line, which is my entry date, the current signal is telling me that this is a buy because the green line is ahead of the red line. So now, once I confirm that, I also want to take a look at my third indicator. Again, I'm just trying to make sure I'm using multiple indicators to get confirmation with what they are saying with respect to what is on the primary indicator. So now when I expand this, you can see on this I'm getting my transparent bars here, because we've gone from a red color to more of a transparent or white bar here. So I know that this is definitely showing me that this is more of a buy signal. So I have a buy signal for my first indicator, buy signal for my second indicator, buy signal for my third indicator. In fact, if I look at this fourth indicator here, what you see here is a signal line, which is the purple line, and you can see we have like a upper level line, a mid-level line, and a lower level line. So whenever this signal line is between the mid and the low level, then this is more of a sell signal area. And whenever we are above the mid and in between the high, then you know that this is more of a buy. So you can see the current signal is definitely between the high line and the mid line. So this is a buy signal with respect to this indicator. So now we have not just one, but we have 1, 2, 3, 4. That is a strong indicator right there. I love this. This is one signal that I really like. Now the last one is this indicator here, which is also my final two line cross. Look at this guy. I'm seeing a crossover on this day. So again, this is the slow line, this is the fast line. So whenever the green line crosses the red line right there, that is my buy signal. So you can see the green line now, or the fast line, is now ahead of the red line. So this is telling me this is a buy signal on this day. So look at this. This is interesting. I have not just one, I have 1, 2, 3, 4, 5 signals. And also my signal is this, also my volume indicator is this last one. The blue line is my signal line, and this black line here is just my cutoff that I've used over time, that I've used to indicate that the pair or this Forex actually has volume that is present. So I like this because the signal line is ahead of my cutoff line, but if it's below my cutoff line, then I know that the volume is drying up. So I like this pair. So I actually want to take this pair today. So once I make that decision and say, okay, I like this pair and I actually want to trade this, the next thing I do is I pretty much go to this website. It's actually called my forexbook.com, and my forexbook.com, and you just go to the tab that says FX calculators. And the FX calculators, I think once you click on the FX calculators, you go to the position size calculator and it will take you here. So once I've decided I want to trade this CHF JPY, I simply just, sorry about that, come here and I look for that pair that I'm trying to trade, CHF JPY, and I open my account size. So now I do have a demo account that I'm currently going to be sharing my screen with you guys. And this is a demo account. And you can see in this demo account, the equity balance is currently 20,139. So let's just say 20,150. We're just going to round it up. So we're going to say the account size is 20,150, right? Now the risk ratio is always going to be 2%. Like I said, this formula that you're seeing here is not something that I made up. This is something that I learned from a guy called VP on YouTube. Again, go check out his page, No Nonsense Forex on YouTube. Now the stop loss pips. Now we're going to have to calculate this using our ATR, and I'm going to show you how to do this. Now you come here again, back to your chart, and you want to simply take your ATR. So what is the current ATR that we're looking at? The current ATR that I'm looking at right now, if I was to zoom into this, is let me say about 1.58. Yeah, let's just say 1.58. So I'm going to take my calculator. I'm going to take 1.58 times 1.5. So that's giving me 2.37. So that is 237 pips. So this number, I am simply going to just come here and enter 237 right here. So once I enter 237, I'm going to click calculate. And once it clicks calculate, it's going to give me a position sizing in lots, 0.25. Now, once I get my position sizing in lots, I take my calculator and I just enter that same number, 0.25, and divide it by 2, and that gives me 0.125. Let's just say 0.13. So I go back to my broker. I simply look for that pair CHFJPY, which is this one, and I'm going to open two different positions because I have divided the initial lot size of 0.25 by 2. So I'm going to open the first one, which is 0.13, and we want to buy, right? According to my signal, it's telling us to buy. So I'm going to hit buy, and I'm going to hit confirm at market price, and I'm going to open the second position as well. So now I have two positions. Now what we're going to do is we're going to set our stop loss and take profit. Now remember, the take profit is always going to be equal to your number of ATR that you use for your entry. So if you remember, the ATR number that we used was 1.58. That was our ATR number. So 1.58. So we are going to take our entry, which is our entry number is what, 171.642. So it's going to say 171.642 plus the ATR. The ATR that we saw was 1.581. We're gonna be adding again because we're taking profit, because we're buying, so we're going to be adding, so we want to take profit highest. But if you're selling, we're going to be subtracting, right? Hope that makes sense, I guess. Yeah. So now this is going to be my take profit, 173.223. So I simply come here, click on this, and check take profit, and that is going to be, what's that number? I'm gonna move this away. 17.223, and I'm just gonna hit confirm from there. So now once I get my take profit, I also want to enter my stop loss. Now remember, I have two positions open, so I'm only going to enter stop loss for two positions, and I'm going to leave this one blank because as soon as we hit the take profit on the first position, I am just going to move the second one to break even. Hopefully that makes sense. So now how do we calculate the stop loss? Remember, the stop loss we used was this pips, 237 or 2.37. So the stop loss is always going to be one second here. It's going to be our entry. I'm all over the place here. Our entry, which is the same 171.642 minus our stop loss in pips, which was the 1.5 times the ATR. And if you remember, that number was 2.37. So we're simply just going to subtract from that number, 2.37. And this is going to be our stop loss, 169.272. So I'm just going to come here, click on stop loss, and enter 169.272 and click confirm, and do the same thing for the second position, 169.272 and hit confirm as well. So see, just that simple. See how long it took me? It didn't take me too long. And I just simply do this every day. I scan my position, I go through my charts, look at what my primary indicators are saying, look at what my secondary indicators are saying. Once I get my my biasness of my direction, then I go into my position size calculation and I look for the number of my lot size that I want to enter, divide that by 2, and calculate my stop loss and take profit using my ATR, and go into my broker account and simply just enter the position sizes based on my stop loss and my take profit. It's very, very simple. It's a plan that you can definitely stick with and follow on a day-to-day basis. So I'm going to be monitoring this trade, and we're going to be seeing how this trade plays out. So again, since we use the daily chart every day, we only come here and look at this trade at exactly between 3 p.m. and 4 p.m. Central Time, since I'm based in Texas. So yeah, that's pretty much how I look. And I come back here and I just pretty much look at my indicators and see what they're telling me. Again, check out, No Nonsense Forex VP. Very, very super intelligent guy with a lot of good content on how to trade Forex the best way and become profitable. So good people, there you have it on my chart. And remember, it is very, very important that you have a risk management plan. In fact, this is one of the most important plans that you need, not your technical indicators, not whatever system that you might have at the back of your mind that I think is going to work for you. This is actually what makes you money, your risk management plan. So please, I beg you, have a plan, emphasize on it, stick to it, and make sure you do not deviate. The market right now is looking very, very choppy, very, very dangerous. Again, by the time I drop this video, I am sure the Feds would have already made the announcement concerning the economy and what direction they're going to be taking with regards to the rate cut. So however that affects the market, only God knows. But please be safe out there. And this is your boy Cincy, your favorite Forex trader with the good vibes. And let's make some small money together.